This video will look at the integration between ONESOURCE Accounts Production and ONESOURCE Corporate Tax. The integration allows businesses using both ONESOURCE solutions to align their tax and accounting functions. This means that data generated from the preparation of accounts can be used directly into the production of tax computations. This can significantly reduce time spent by the tax team on manually inputting trial balance information and repeating analysis work performed by the finance team. This will also ensure that any journal adjustments posted for statutory reporting purposes are automatically picked up in the tax numbers and ensures that both teams are working from the same version, reducing the risk of error. The process starts with the production of statutory accounts using ONESOURCE Accounts Production. Information from here is then used to feed into the ONESOURCE Corporate Tax tool to generate data into the tax computation. We will first briefly look at ONESOURCE Accounts Production to understand how the trial balance information is mapped within the tool. This same mapping is then recognized by ONESOURCE Corporate Tax to generate various analysis schedules for the tax computation. We are now in ONESOURCE Accounts Production, where we have prepared a set of statutory accounts. These accounts have been prepared using the IFRS template. However, the same process applies for FRS 101 and FRS 102. The accounts will have been prepared based on the mapping set up in the first year of using ONESOURCE Accounts Production. This involves assigning the company's own account codes to the relevant reporting structure within the tool, as shown on this screen. This mapping generates the financial statements and the disclosure notes, and all balance sheet and income statement accounts will have been mapped. In this example, we have two remaining accounts, depreciation and amortization, which we can assign to the relevant categories. Expenses will be analysed by nature and by function. The breakdown of the income statement is set out in some detail, which will also be useful for tax purposes. For example, it includes depreciation, finance costs, donations, etc. And this same analysis can be used to build tax computations. ONESOURCE Corporate Tax will recognise the allocations to generate the profit and loss account and various supporting analysis schedules in the computation. Within Accounts Production, we can generate a file using this Export to ONESOURCE Corporate Tax function, which will pull through all the mapping. This file can then be used by the tax team using ONESOURCE Corporate Tax to automatically generate data required in the tax computations, and this can be applied for every entity within the group. This next stage will be shown by my tax colleague.
As we have been discussing, an additional benefit of ONESOURCE Accounts Production is that it integrates with ONESOURCE Corporate Tax, pulling the same financial data that has been used to complete the statutory accounts directly into ONESOURCE Corporate Tax to populate the relevant profit and loss schedules of the tax computation, providing a significant step towards streamlining your tax compliance. I will demonstrate what a straightforward process this is and highlight the key benefits in both time saving and the reduction in risk of having to manually rekey financial data into the tax computation. In this example, my stats have been completed using the Accounts Production tool, and the finance team have helpfully exported the integration file to a shared folder for me to pick up. I'm starting with a blank computation of ONESOURCE Corporate Tax, and will build out the tax computation using the Accounts Production integration and demonstrate how quick and easy this is to do. The first step is to select the relevant accounting standard for the computation from the Properties drop-down menu in the Advanced toolbar. In this example, the stats have been prepared under IFRS. When I bring the Accounts Production file into the ONESOURCE Corporate Tax, there is a validation process which ensures that the accounting standard in the tax computation matches the accounting standard under which the statutory accounts have been prepared. From the Data toolbar, I select the Accounts Production icon, which kicks off an easy-to-follow integration wizard. I am prompted to find the file from the Accounts Production tool that my finance colleagues have helpfully provided me with. From here, I can choose which format I want to bring in the expenses from the import file. This is based on the way the data is structured in the Accounts Production tool, and I can either bring this in analysed by nature, where the line items of expense are broken out in detail, or analysed by function, which is where the expenses are grouped into items such as cost of sales, providing flexibility in the format and level of detail I want to include in my computation. In this example, I'm going to bring in a detailed analysis of my expenses by function format. And in just a matter of seconds, the system pulls through the same data that has been used to prepare your financial statements and populates the relevant schedules of the tax computation. As you can see, it has brought through the summary P&L into the D sheet. And if I click through the links, you can see the underlying P&L analysis that has automatically been created in the additional D schedules. Compare this to the time you would normally spend rekeying this level of analysis. I now have my detailed profit and loss analysis in the tax computation and can start making my tax adjustments. We have seen the tax computation being built, so I'm not going to go through the tax adjustments at this stage. But this demonstrates how, by using the integration with ONESOURCE Accounts Production, you can pull data directly from the financial statements and highlights those key benefits and significant time savings for the preparer, and reducing the risk of having to manually rekey data into the tax computation.